Stop aiming for 1 to 10 hour trades. They're keeping you broke. Let's get one thing straight. All of those 1 to 10 hour trades that everyone is flexing on the social media, they look cool on the screenshot, but that's exactly what's holding back most of the traders, including you, from making consistent profits with trading. Let me break this down for you. Because by the end of this video, you're gonna understand why chasing high risk-to-reward ratio trades is sabotaging your trading, and what you exactly should do instead. So let's go. You open the Instagram, you see another trader flexing his 1 to 20 hour trade. That looks impressive, right? Yeah, but that's exactly until you realize that they have lost from 10 to 20 trades before they got their 1 to 20 hour trade. And even that might be fake. So let me tell you why this is so dangerous game to play. Basically, there are only two metrics that really matter to evaluate any strategy. Just two. No fluff, no complicated math. Here they are: win rate and risk to reward ratio. Now, in a perfect world, we want both of them to be as high as possible. We want to have like 100% win rate, and we want to have an infinite amount of return on our investment or risk. But let me bring you back to earth. That's not how trading works. These two metrics are negatively correlated. The higher your return on your risk, the lower is going to be your win rate. And the higher is going to be your win rate, the lower return you're going to get on your risk. And this is exactly where most of the traders get trapped. They go all in for 1 to 10, 1 to 20 hour trades, thinking that that is going to make them rich. But the price they pay is really brutal. That is very low win rate. Long losing streaks. An emotional instability that eventually wrecks their mind. So let me drop a golden ratio for you. You should be aiming for the win rate 50% or more, which is really solid. And having that win rate, you should be aiming for the trades for the return, which is something about 3 to 5 R. So if you're risking $1, you should be aiming for $3 to $5. That's it. Not 10 R, not 15 R, just 3 to 5 R. That's the sweet spot. That's exactly what's going to give you a very solid return on your risk and a very good win rate, a solid, consistent profits. And which is exactly is going to build up the confidence and momentum in your trading. Now, maybe you have heard that before, but let me give you the reason why all of those high return on your risk trades doesn't work. And make sure don't skip this part, because this is really important. And whatever strategies you're gonna trade, this is literally going to make or break your trading if you understand this correctly. This is called the market movement range. Most traders have no clue of how much actually the market moves in a day. And they simply set the take profits based on what they wish to happen, not what statistically is likely to happen. That's a huge mistake. And guess what? Actually, you can predict with almost 95% accuracy how far the price is gonna go in a given amount of time. How, you might ask me? You have to use ATR indicator, ATR, average true range. It shows you the average distance the price moves in a given amount of time. Let me show you how this changes the game based on what type of trader you are. Day traders, listen up. Open the ATR indicator on the daily time frame. Let's say you're trading the Euro USD. On average, the daily ATR on Euro USD is about 60 to 70 pips. That's your battlefield. That's your whole playground for the daily high and low. So literally ask yourself, why the hell are you setting up 100+ pips take profits? Your take profit is never going to be hit. Unless it's a high volatility day like, let's say, NFP day. You're literally aiming for the moon when the sky has a ceiling. In simple words, you're setting up yourself to fail. Now, let's say you're a swing trader. That's a different story. You hold your trades for days or even sometimes for a week. So basically what you can do is to open the ATR on the weekly time frame. And let's say it shows you 200 pips. Most importantly, whatever type of trader you are, you don't try to milk all of that. all of the daily range. For example, it's 200 pips. No, you just aim for 50 to 70%, let's say, of that move. Because markets rarely moves 100% in one direction, like for its full, like weekly or daily maximum without any retracement against your side, you know? So simply, it's about playing the game smart, not squeezing up every last pip out like it's a lemon. And if you're a scalper, your game is lighting fast. You're trading London and New York sessions. In that case, you just open the time frame ATR on the 4-hourly time frame or 8-hourly time frame. So that way you will get the realistic expectations of how many pips you can expect for your moves, for your trades. And even though, as I said, you have to be aiming for your take profit from 50 to 70% of the ATR, that's exactly how you are going to survive this game. That's how you stop overreaching and start hitting consistent profits. So here's where it all comes together. If you're aiming for high return on your risk without knowing your ATR, you're simply guessing. And in trading, guessing is really expensive. So instead of that, you have to align your take profits with what the markets are actually likely to give you. You're gonna trade with less stress, way less stress. You will reduce the number of break-even or missed TP trades. Definitely, you're gonna see your equity curve to smooth out vertically. Let me be blunt for a second. Aiming for 1 to 10 hour trades, it is not bold. It's not smart. It's not elite. It's lazy. It's emotional. It's driven by ego, not the actual data. And as you see, this is exactly what's keeping you broke. And if you simply recalibrate your take profits based on what the markets are actually going to give you, you'll instantly become a more dangerous trader. Not because you're smarter or because you're trading with precision, but because you're no longer chasing fantasies. You're executing with logic. That's where the real money is made. And if you're serious about replacing your 9-to-5 job with some juicy trading profits, check out this video.